Scanning interesting business models. Detecting high net worth. Subject identified.
Quietly, this champ built a $50 billion empire by buying and selling websites. He started at the bottom, trading websites for $100 and worked his way up to bigger deals.
If you have $5,000, start with $5,000. If you are more fortunate and you have 50 million.
We uncover his money-making playbook and why now is the best time to get started.
It's probably easier in some ways because there's more exit options, like all the way from really small deals to much larger deals.
We investigate how to value a deal so that you make a guaranteed profit.
Valuation is somewhat arbitrary. The business is so small, sometimes it's literally just what the seller wants.
And he gives us a no bullshit perspective on what works and what doesn't.
When you do a deal like this, do you need all the money up front? Can you get a loan?
I think there's a lot of misinformation out there with this answer. Most people are lazy and will do a bad job of doing almost anything. So if you turn up and do a good job and you do the things you say you're going to do, you're automatically ahead of almost everybody.
Welcome to Money and Power. This is a masterclass on how to turn flipping websites into a multi-billion-dollar M&A boutique. We want to have peer-to-peer conversations. The question is how to win. Alrighty, then let's get started. I call you the billion-dollar website flipper because you started in a dorm room flipping websites and this got bigger and bigger and bigger. And now you are in the Olymp of finance, so to say, the highest calling of mankind, M&A, with your own firm. And you just told me your total transaction volume is in 50 billion, which is absolutely massive. You guys have grown a lot. So give us the story of how you got into M&A in the first place.
Sure. So many years ago, going back to 2009, 2010, I was at college or university trying to figure out what I wanted to do next when I graduated. And back then, I discovered buying and selling websites or online businesses, tech businesses. In 2010, there was really no market for it. There was no M&A firm you could call who specialized in tech businesses. There was no way you could really find to learn about these things. So I actually started doing my very first deals on platforms like eBay, where most people today, you would not even consider selling a business on eBay. It doesn't make any sense. But back then, it was one of the only options. So I started out doing deals for myself very early on when it was literally just, like say, me in a dorm room. And then transitioned quickly to building what is now one of the biggest tech M&A firms in the world because we pivoted and transitioned to not doing our own deals, not doing any flipping, to helping founders who have built successful 7, 8, 9, hopefully one day 10-figure businesses and want to sell them. So that's what we've been doing since. And now we have in our M&A business over 50 people. Our head office is New York, so I'm currently sat in our tower in New York at the moment. We have other people all over the world, and we work with generally founders of 8 and 9-figure tech companies to help sell.
I heard stories that you bought your first website and it was worth a couple of $100 and then basically flipped it. So how did all of this get started?
Yeah, exactly. So first deal was about $100. I was a student, so I didn't really have any money. I'd literally use my credit card back then, and I'd buy something at the beginning of the month. And back then, you basically just use PayPal. So I'd buy something on my credit card at the beginning of the month, and then I had to try sell it by the end of the month. Otherwise, I couldn't pay my credit card bill, basically. So that was my business model starting out. I studied business, so I always had like a business and finance background. What I figured is that people would pay a multiple of your like revenue or your earnings on a business. But now I was essentially buying either domains or websites that were making no money, finding a way to generate some income. And it was generally really simple, like not really even a huge amount of income, packaging it in a better way, which is really something we've applied throughout our entire business. You can do $1 billion deal and $100 deal. It's very important you present it well and present it properly. It doesn't matter what you're selling. It's the same in any industry. So we started out doing that. The intention was to buy something in a month, put on the credit card by the end of the month when the bill was due, to have sold it, and then take that, hopefully more money, and buy something a bit bigger. So we'd start with $100, maybe sell it for 500, then I would take the 500, maybe sell it for 2,000, then maybe you take 1,000 and sell it for 3,000.
Some people might say, why not just build the thing yourself, right? How much value can you really buy for $5,000? So what is your argument for why should you buy a business and not build a business? And let's start with small businesses, why you think that might make sense.
Yeah, I mean, I think the answer really applies to a $500 million business or a $5,000 business. Conceptually, the answer is the same. And it's really just, if you are launching a business yourself, there's a lot of, even if you're the smartest person in the world or you've done it before, there's always a risk it won't work. If you buy a business that is established, even if it's tiny and it's making $100 a month, you at least have some proven traction. And again, that applies to $500 million business. Maybe it's making $10 million a month. It's exactly the same thing that applies. So it's really just a shortcut. Some of it also depends a bit on your skills. I don't have any technical skills. So if you said to me 10, 15 years ago, build a website or whatever, I would have no idea how to do it. So it made more sense for me to buy something and apply my business knowledge to improve it versus launching something. Like, yes, if you build something yourself, it's probably going to cost you less money in total dollars. But if you value your time, there's also a time value of money. So maybe that $5,000 business you start with, maybe it took 12 months for the current owner to get to the level where it is today. So you'd have to spend 12 months to essentially have something worth $5,000. Or obviously it could be a lot more successful. It could be worth 50,000, 500,000, 50 million after 12 months. I've seen over the years all sorts of different businesses after that. So really it's a case of you're accelerating your success. So I guess anyone listening, you can really start at any level. Yes, it takes time to get to 7, 8, 9, 10 figure deals if you start small, but everyone has to start somewhere. Every person who built generational wealth started with one small deal. That's the same with everybody.
Yeah. And that's a good point. So would you say there's like a threshold for when it starts making sense to buy businesses? Or you would say today in 2024, you can literally, if you want to get started, you can even do a 5K deal and can, double the value. It still makes sense.
Yeah, I don't think there's a threshold. I think it's all relative to what resources you have available. If you have $5,000, start with $5,000. If you are more fortunate and you have 50 million, start with 50 million. Everyone is different from that perspective. But yeah, it's really just you will accelerate. You are more likely to buy something that's actually successful. You don't have to worry about having any unique ideas. You just have to improve what's already there. And I personally find it easier to improve something than think about how to start something from zero.
So let's look at this space between, let's say, $1,000 to $100,000, plus minus. When you do a deal like this, do you need all the money up front? Can you get a loan? Are there some interesting deal structures that you have seen that people can apply?
So that's an interesting question. I think there's a lot of misinformation out there with this answer. I was speaking to someone on Twitter the other day because there's a lot of content saying, oh, you can buy $1 million business or a $10 million business or a $100,000 business with 5% down or something like that. The reality is the vast majority of deals happen with mostly cash. Yes, there are exceptions, but the majority are cash. Can you structure it? Yes. So again, it doesn't matter how big the business is. It could be $1 billion. It could be $100,000. You could say, okay, on the $100,000 business, my offer is $70,000 because you have $70,000 in cash, and then I'll pay you $15,000 after a year, and then another $15,000 after 2 years, based on certain things happening. So maybe that's the business growing, or maybe you as the founder helping to train me to make sure I know what I'm doing. There's hundreds and thousands of different ways to structure that. In terms of can you get a loan, for most people, no. In the US at least, like I said, I'm English, so I'm from the UK. I now live currently in New York. In the US, you have SBA loans, and SBA is essentially a small business administration. It's a government-backed loan that you can use to buy businesses that meet certain criteria. But generally, that only works if you are a US citizen and you're buying a business from another US citizen with years of tax returns. And it also has a maximum limit. So it generally doesn't work for businesses above 5 million. And you'd almost never see it on deals below, say, 500,000. So you only really have that range of 500,000 to 5 million. Below that, there's not really that many options for financing. There are definitely options that come along. We've seen kind of new services and products and companies that come along and think they can do it, but have never really stayed around. And then above that level, there are definitely more options. Ironically, if you want to buy $100 million business, there's many options out there of ways you can get hold of cash and companies that will want to lend to you or invest in you. And obviously, you can always negotiate a deal with the seller. But the reality is, if you're a savvy seller and you've hired a company like FE International on your $100 million business, you're probably not going to accept a deal which is $5 million in cash and then 95 million paid in a structure that you heard on TikTok will work. It's not really how it works.
So let's go extremely deep on how do you actually buy a business? How do you spot good businesses? What are different types of businesses that you see? Valuation, I think, is also a very interesting topic. But first, very quick question. Does this even still work in 2024? Because the internet has been full of, and you started with this a very long time ago already, right? So is there even still opportunities out there, or is this market so saturated that, basically the only people making money with this are people selling courses on how to do this?
I mean, people making courses definitely making money, but I don't personally believe in saturation. I just believe in doing it better than other people. Most people are lazy and will do a bad job of doing almost anything. So if you turn up and do a good job and you do the things you say you're going to do, you're automatically ahead of almost everybody. Actually, before we jumped on this podcast, I was speaking to a client who recently sold their business in the 9-figure range, so over $100 billion, and they had acquired that business about 5 years ago in the 6-figure range, 6-figure valuation range, that is. So there's definitely, and that's just one successful example, but there's definitely examples where people are buying small businesses, working on them for 1, 2, 5, 10 years, and then reselling them for more. There's not really like an upper limit or a lower limit. It doesn't work. You see multi-billion-dollar deals get done all the time. For example, when Facebook bought Instagram for $1 billion, I think most people probably commented at the time that it was stupid and they were overpaying for that business. But now Instagram as an independent business would be worth significantly more. So if Mark Zuckerberg can do it with $1 billion, I think anyone can do it at any level if you apply the same things. Obviously, you don't necessarily have the resources that Facebook or Mark had, but you can just do it on a smaller scale. So yes, it definitely still exists.
So let's imagine I'm 18-year-old Kevin. My net worth is absolutely laughable. So I have a couple of K to invest. How do I start? So I guess I somehow need to, find my first couple of deals. Maybe I need to think about what deal do I even, what kind of business do I even want to buy? How do I get started?
Yeah, so the hard part is finding a business to buy. So there's not a perfect way to do it. You can go to a marketplace. They're a marketplace. The problem on marketplaces is you're then competing against everyone on the marketplace. When I started out, I would do deals in private industry forums because no one was buying and selling that. So I started there. There was no competition. That still exists in almost every industry. So you could probably pick any industry you know about, find a private forum or community, join that community, become active, and with 100% certainty, there'll be business owners in that group. And the thing with business owners is a lot of them have multiple projects. So sometimes the best opportunities are the ones started by someone super successful, but they had this kind of idea that they half started, made a little bit of money, then they gave up on it. So if you have really limited resources, that can be the best place to start. Or you might even find people who are looking to sell something and maybe they've just started one thing, it's done okay. Maybe they now have a job or something like that. So I think you want to try find a place where you have not necessarily the only person with access to deal flow, but the best place to find deals, ironically, is not where people are selling businesses.
One thing I can add from my side is in terms of finding good businesses. Obviously, there's all these platforms that we all know, like Flippa or whatever, but as you already said, I mean, I think you can find some good deals on there for sure. But if you want to find the real gems, you need to dig a bit deeper. And I've been consulting someone who has been doing an HVAC business roll-up strategy for years now. Basically, they are making tens of millions of EBITDA with an HVAC business. So basically, AC repairs and stuff like that. And this guy, how he actually got started, and I think that's very interesting, is he joined a Facebook group where there was HVAC owners talking to each other about their problems. And he then, I think the guy bought the Facebook group from whoever owned it for a couple of $100, and then started out reaching out to these HVAC owners, the ones who were most frustrated, and told them, look, I can buy your business. And obviously he already knew about the problems of these HVAC businesses, and he knew with his system, with his processes, he can kind of take them to the next level. So that worked brilliantly well for the guy. And also for us, I mean, buying YouTube channels is also part of our strategy. So we're like, I often look at, a couple of Discord groups, for example, where I know there's interesting YouTubers in there. Twitter is also interesting to just see who is kind of active in the space. And then, just initially writing people, even if they don't really want to sell in the first place, but just being in contact, saying, hey, like, I'm interested. If you ever want to, consider selling, I'm here. And then you're probably, if you stay in touch with these kind of people, you're probably the first person that they will call if, they actually want to sell.
Definitely. I think the example you just gave there is kind of what I was trying to describe.
The next question someone might ask themselves when they're looking to buy a small business is, what business category should I even buy, right? There's different types of businesses on your website. Even for these bigger businesses and deals, you are listing 4 types of businesses: SaaS, e-commerce, content, technology. Obviously, on this small level, there's a couple of more. You could buy an app. So if you would draw up the landscape for us, what are roughly the different types of businesses that someone could buy in this small price range, below 100K? And maybe after that, we can also talk about what you think, like, are there categories that you like more or that you like less, or how should someone decide between these categories?
Yeah, so the categories don't really change as businesses get bigger. So you can apply it to $100 or $100 million. It's all going to be the same. At least in the tech space, you have SaaS companies, which is software as a service. So that's recurring revenue. You have e-commerce businesses, so selling products online. And then there's lots of derivatives of all of these business models. So for example, within SaaS, you mentioned apps. You'll have app businesses, which often have a recurring revenue stream. And then you get service businesses. So we work with a lot of agency owners, and services can cover all sorts of things. You can have marketing services, design services, programming services. You can have services for literally anything in any industry. So then you get things like content. Like, we call it digital media, but content could be a blog where people are writing blog posts. It could be a YouTube channel. It could be a podcast. So they're the main categories we focus on. And like I said, there's lots of subcategories within. So I think if you start there, in terms of what you should buy, like, is there a good category and a bad category? I always think the answer to that question is no. It really depends what you're good at. If you do not know how to code, you're not a programmer, the first business you buy should probably not be a software company, unless you either have a partner or a friend or something who will help you, because you're not going to know what you're doing. Same with e-commerce. Generally, e-commerce businesses are great for people who are good at marketing, because it's more about kind of selling. Yes, you have to manage logistics, things like that. Content, you probably shouldn't buy a YouTube channel if you're not confident putting your camera on and putting like a headset on and doing audio. Yes, there are ways you can probably produce content without it, but it's probably not going to be that effective. You really need to focus on things where your skill set can help with that business. And I think the example you used earlier, like the HVAC business, if you interviewed 1,000 people who are currently doing an MBA and you said to them, name an industry you are passionate about, probably 0 of them will say HVAC. They'll all say AI, technology, crypto, YouTube. They'll give all the buzzwords they've heard. So if you'll compete, there's 1,000 smart people who graduate their MBAs. They're all going into that space. How many people are graduating and going into the HVAC space? Almost nobody. So I would argue that the best thing to do is often not following the trends. That doesn't mean there's not going to be like buyer demand. Buyer demand, particularly at the high level, is really driven by like the earnings of a business. If something is making money, the best thing about M&A is there's always someone out there who will want to buy that business.
And I think mentally you can also think about a matrix where there's businesses that are either technically very complicated or are not, right? And then if you are let's say many of our followers are, in their 20s and maybe they studied business or whatever, if you don't have the knowledge to code, to really take a product to the next level in terms of technical terms, maybe you don't want to buy all these businesses that need some technical know-how, because at this deal size below 100,000, it also doesn't make any sense to bring in a technical person, because this is going to eat up all your profit margin, right? So you want to, whatever you buy on these small deal sizes, you should make sure you can do basically everything. And this doesn't mean that you need to be an expert in it already, but it should mean that at least within the next couple of weeks or months, you can become an expert. So if you buy a content website, you don't if you have never done content in your life, probably you can learn that. It's not that complicated, but you should have the confidence that you can become really good at that and you're in some way passionate about it. Otherwise, why buy the business?
Definitely, it's a really important point. Like, the smaller the business is, probably the more work you have to do yourself. So it's more important that you understand it.
So now let's say we decided for one of these categories, whatever, e-com, SaaS, apps, content, whatever it is. And we are now looking at a couple of deals. We found them through a couple of Facebook groups, or maybe we even went to Flippa. Now, how do we spot a good business? What are some metrics or some filters that we can apply to make sure this is a proper business?
Well, so yes, the first thing you need to do is look for something that you can actually improve. Just because it's a good business doesn't mean you can improve it. I generally think there's no point buying a business if you can't do at least some things better than the existing owner. So sometimes, ironically, you might actually be looking for a bad business. You might be looking for a business that's doing lots of things wrong, and you can come in and improve it. I think the important things, you need something that's making money. You don't want to buy someone's idea. Like, maybe they've built a really fancy kind of platform, nice looking website, all this technology, all these ideas. But if it's not making any money and has no existing customers, you probably don't want to buy that business, regardless of what you think you can do with it. Even if you're good at marketing, you don't have any proof that it can make any money. So I think making money is important, at least revenue generating. Ideally, it will be profitable. But there's lots of examples of businesses you can buy which are generating revenue. They're not profitable because they've been badly run, and you can improve it.
Now, let's say we decide for a business. Sometimes we're lucky and, the website just gives us a price, but sometimes we need to come up with some kind of valuation. And there's many ways to value a business. How do we go about that? Do we take revenue multiples, EBITDA multiples, some other multiples? Do we take some kind of comparables? How do you go about that with this kind of small deal size?
So valuation is a combination of art and science. A lot of our team internally, we have a big valuation team. We have a daily valuation meeting. We spend a lot of time talking about valuation. And even with smart people in the room, people might slightly disagree on how to calculate it. Kind of ways to do that. So one might be a DCF, or discounted cash flow analysis, which is a very common finance way of valuing a business with some established history. We'll also look at what we'd call comps, or precedent transactions, so similar businesses that have sold.
I know that some people still going to ask in the comments, what are some rough multiples? So do you, for these kind of smaller deals below 100,000, is there a very rough multiple range that you can give? And then are these revenue or EBITDA, or what kind of multiples would those
For
be?
the majority of small deals, you'll look at either a profit or close to profit multiple. Generally, you don't really get revenue multiples until businesses get quite a lot bigger than the 100,000 level. And really, the range can be anything from zero. Lots of businesses are just worth nothing. So zero is the low end of the range, and then probably up to, say, 10 times earnings, small businesses. But at that level below 100,000, my belief, and we don't do deals at that level at all, but my belief is that valuation is somewhat arbitrary. The business is so small, sometimes it's literally just what the seller wants. The seller might say, I want $50,000. And that's just enough. They're like, well, it might be irrational, but they say, well, I spent a bunch of time on it. I built a nice website. I built a YouTube channel. I made some videos. I had to pay to get them produced. That's what I want to sell for. Is technically that correct way to value a business? No, but the way small deals get done is often just like that. Like your HVAC example, right? That's not something anyone teaching you how to buy businesses would probably not teach that approach, but it works, and that's the reality of how deals actually get done. Even though most people wouldn't know that's a thing. A lot of it's just like the connection you build.
And let's move on in the, let's say, in the whole process. Now we're at the point that we, have a rough idea of what this thing might be worth and where we might want to take it. Are there some negotiation tactics for these kind of small deals? I imagine it's, in some sense, it's very different from, the 100 million plus kind of deals that you are doing, where there's more stakeholders involved, right? And more people sitting on the table. In these kind of scenarios that we're talking about, we're just talking to the guy directly, or the girl probably. But are there nevertheless some negotiation tactics?
Yeah, it's a good question. I mean, yes. Firstly, a lot of it depends on who you're negotiating with. And everybody has a different style. So you can't just... The people who are best in the world at negotiating can change their style based on who they're dealing with. They don't just do the same approach with 100% of people, because it doesn't work. So firstly, you have to try and figure out who you're dealing with. And I guess there's lots of different considerations.
Sorry for interrupting, but like these different negotiation styles, that dependent on the personality type of the person, or are there some frameworks for that from your experience?
I personally don't use frameworks. I probably could, but I don't. I think I would look at it. And firstly, the first thing to do is find out as much as you can about the seller. And again, this applies to all deal levels. One of the best things about social media today is it's relatively easy. Most business owners have an online footprint, so you can find them on Instagram, Twitter, LinkedIn, Facebook. They're probably active somewhere. So usually you can do a little bit of research and find out a bit about them. Usually if you see someone writing content or producing video content, you'll have a reasonably good idea of their personality, so you can figure that out. People are much more likely to do a deal with someone they actually like. So yeah, you can read hundreds of books on negotiation you can read, but ultimately, whatever people say, people do business with people they like. So I think that's the first thing. If you can find out how to communicate with them based on what you can research or what you ask them, that's a good way to start. In terms of how you then negotiate, I think a lot of it is figuring out what's important to you, what's important to the seller, assuming they will tell you. And sometimes people will tell you most of it, and you can tell them some of it. And then it's really, there's lots of theory that will say you shouldn't do this. But I think the best way to negotiate is then find a way to meet in the middle. So let's say, Kevin, I'm buying your business, and I come to you and I say, here's 3 things I care about. Here's 3 things you care about. If there's no overlap in those 3 things at all, so 3 things I want, you can give me, and the 3 things you want, I can give you, it's easy to come up with a deal. But maybe 2 of them are complete separate, but 1 overlaps. And maybe one of them is like, you say, well, Thomas, I will sell you my business, but I don't want to be involved. I want to leave on day 1. And maybe my criteria is, Kevin, I need you to stay for 12 months to help me run the business. So that's the point you should focus on. So we then might agree, why don't we do 3 months? So you help me for 3 months, then you can leave and go from there. So that would be my suggestion from that perspective. And then the things that you don't really care so much about, don't try and negotiate just for the sake of it. Some people, particularly when they're young or less experienced in negotiating, will try and negotiate absolutely everything because they think it's some sort of like point scoring exercise. As I've got older and more mature at negotiating, I realize that's not really necessary. if you don't really care about something, don't negotiate it just for the sake of it, or just to seem like you're clever. Take the win and move on. The quicker you can get to an agreement, the better. And if you're like buying businesses, or you want to sell businesses or run a business, one thing you need to learn quite quickly is time is money. So if you mess around for a month going back and forth over one stupid term that doesn't really matter to you, but you're just trying to get it because you can then tell your friends you got to win, that's pointless. Just get the deal done, move on. You can then own the business and you can start doing whatever you want there. So that'd be my suggestion from that way. So focus on the best way to communicate.
All right. So to all the young gym goers and martial arts fanatics listening to this, don't use intimidation tactics. Uncle Thomas basically says as amicably as possible, right? You're looking for the synergies, and that's where the magic happens with these kind of negotiation tactics and deals. So let's say we found this thing. Let's just say this business is like a $30,000 business. We negotiated nicely. We're kind of agree about all the deal terms. We now are going to be able to buy it for 20,000 for whatever reason. We buy it. What types of value levers are there? I mean, for these massive, let's say like these mega funds, right? They do deals where it's all about financial engineering almost, right? So that's where they already secure the value of this deal. But I guess for these small deals that we're talking about right now, below 100,000, that's where like you gotta roll up your sleeves and you gotta do some work to increase the value. Are there in your past when you were doing website flipping, micro private equity basically, what were like your favorite types of value levers that you could pull?
So I guess the ultimate value lever in any business is really growth. The more a business is growing, the more it's worth, generally speaking. And then obviously the more it grows, the more resources you have. You can hire more people, you can outsource things, you can buy things. Bigger businesses are easier because you have more resources. So growth is the most important. But often, I think what people confuse when it comes to growth is growth can come from really simple things. You could come up with 100 different ways to improve a business, and one of them might take you 1,000 hours to do, and it might not necessarily be that effective. Sometimes the simplest thing to do, and I think I mentioned this earlier, but like increasing prices can be an easy way to improve. Is one of the easiest levers in any business, regardless of the size, is pricing. And sometimes this could be counterintuitive. Sometimes reducing the price could be a good thing. Maybe the product's way too expensive, or whatever you're selling is way too expensive. And if it's lower, maybe your margins are slightly lower, but maybe you're selling, so maybe your margin reduces by 50%. So most people say, no, Thomas, you're stupid. You should not do that. But what if you then sell 10 times more? Maybe that's a good idea. Or it can work the opposite in the same direction. Maybe you could increase the price by 10 times, but you sell 50% less. Like you're still making 5 times more money, everything else being equal. So in most businesses, the best lever is pricing, and or a derivative of pricing. So for example, if say, Thomas, well, I'm not selling a product, I have a blog, and my blog has ads on it, then the way around that might be better ad placement, so more people click on it. It's not quite the same as a pricing improvement, but you're essentially making more without really doing anything.
I completely agree with the fact or with your proposition that it's often about these simple things. And one anecdote I can tell from this YouTube acquisition space is one of the first things you typically do when you buy a YouTube channel is just increase the upload frequency. And that sounds so easy. It's not as easy as it sounds, because obviously in the back end you then need to have the production capacity to actually pump out more videos. But it's also not like, okay, let's do completely different content, or let's build like a shop on top of our channel. No, it's literally do what you're already doing, just do it a little bit more often. Instead of 2 videos per month, maybe do 3. And that's how even the big funds who are like in the private equity space and doing acquisitions of YouTube channels or channel bundles, that's how they realize the first value, just increasing upload frequency. So yeah, sometimes focusing on the simple stuff makes sense.
Yeah, that's a good one. Like upload frequency, that can apply to almost any business. So if you buy a blog and they publish once a week, the simplest way to improve it without knowing anything about that business is probably publish twice a week or once a day. And you can apply the same with social media. Obviously, you can't post 1,000 tweets a day, but if you're active on Twitter, posting 10 times a day is probably better than one time. And that applies to lots of things.
Now, finishing up our journey, when you buy this business, question, do you already buy it? I mean, you did that in the past. Did you buy these businesses already with a time to sell in mind? So you were like, I think you told this anecdote where you needed to like flip it at the end of the month again to make your credit card payments. Is that what you suggest people do? Like buy it and already know, okay, like in a couple of months I want to sell it? Or do you do it otherwise?
Yeah, I think it's important to know the timeline, because I knew my timeline. So that meant if I had an idea and it would improve the business in 12 months' time, that was pointless because I had to sell it within a month. But if you look at like private equity, a lot of private equity funds usually have a 10-year duration. So they don't necessarily care about things that improve the business on day one. They want things that will like gradually improve the business over time. So knowing your duration is important. There's not a right or wrong answer to that. I had a credit card bill to pay at the time. Lots of buyers we work with today might have, if they're buying a business, say, again, 100 million example, using debt, maybe the duration of that debt is 5 years. So in 5 years, they have to either pay it all back or they have to find a way to sell and then use some of the proceeds to pay the debt back or the investors back or whatever it might be. So knowing it going in is very important because it will help like define the decisions you make. Should it be a short-term decision or a longer-term decision? You don't really know until you kind of get into it. Yeah, so very important to know the duration because then you can establish what you should be doing. Like I said, if I had pay my credit card in a month, there's no point doing something that improves the business in 12 months. And equally, if I'm holding it for 10 years, maybe I don't need to rush on day one and make a quick fix to a longer-term problem. Maybe I can spend 3 years to fix that problem, which means that over time it will grow more, but maybe the short-term growth is less. So it's definitely no right or wrong answer, but it's definitely important to know at least a range of what your duration is going in. Even if it's just as simple as like less than 1 year, 1 to 3 years, more than 3 years. That's probably a pretty good way of establishing what you can and can't do in that time.
That's cool. And now, if I want to sell it, how do I actually do that? I mean, if I have a 100 or $200 million business, then I contact FE International. But if I, have like a $20,000 business, just put it on Flippa, or what do you suggest?
Well, I think a lot of it might depend, like where did you buy it from? Probably if you go look where you bought it from, chances are there's a similar way to sell it in there, maybe to a bigger business in the space. The reality is at the low end of the market, it can be quite difficult because there are some marketplaces, but marketplaces have challenges. But for almost any industry you buy in, it doesn't even have to be like a online tech business, there's going to be a marketplace or some sort of way you can sell a business or connect with business owners or investors in that industry. So I don't want to like name specific platforms because it really depends on the business, but that's usually a good place to start. I think one of the advantages of marketplaces, generally by their very nature, you're going to get around market value for your business because there's lots of people, professional buyers in that industry on that platform. Hopefully, if you do a really good job buying a business, you might get approached. A lot of the clients we work with have built a successful business and they get approached by a buyer emails them, and then they come to us and we represent them throughout the process. We help negotiate with that buyer and bring other buyers into the process as well. So obviously on day one when you buy a business, that's not going to be the case. But if you do a good job marketing, growing the business, being successful, gaining market share, over time people are going to start to approach you. So that can be a good option as well. That's probably not going to happen if you have a $20,000 business. It's more likely if it's 20 million. But there's definitely some opportunities that can exist. Just doing a better job will open doors in lots of different ways. But yeah, starting out, I think if it's $20,000, probably a marketplace or wherever you bought it from, that's usually the best way to go.